First thing you got to deal with is the recession that's coming up, or depending on how you believe, already here. The way to deal with this recession is the same way to deal with all the other recessions, which is to go harder on your business, reinvest heavier, pick up those clients or customers that are going to be lost from your competitors that die. It's the same strategy during COVID. Not sure why everyone's super worried about this recession because the pandemic was basically like a depression in the sense of there was periods where 70-80% of businesses were closed, not to be opened again. Now there was stimulus money which provided for all-time highs in the stock market, which was interesting. Kind of proves that there's no longer much of a correlation between the actual health of the average business and the health of a public company. It seems that the correlation for all assets, whether it's Bitcoin, equities, you name it, property, is when they turn on the money printer, when they are printing money, assets go up. When the money printer is turned off, assets go down. This is the new economy. So that's why the economy, at least on paper during the pandemic, looked good, but the actual economy in terms of your business, in terms of getting clients and customers, was far, far worse during the pandemic. So if you've made it through that and your business is still intact, I wouldn't worry too much about a recession. Recessions happen every 8 years or so. It might mean that spending is down, some of your customers or clients go out of business. Whatever, just increase the volume. Not a big deal. Not something that I would be particularly worried about, unless when it comes to your assets. But that's another story. I recommend probably investing heavier in your business or businesses, not just in terms of asset protection, but in terms of inflation, which is our second problem. So it's two birds with one stone. True inflation numbers, I think, are closer to 20% if you look at true inflation in those sites, or at least they might have been. They might be down now as they're raising rates, but to get the high inflation down in the 70s, they had to raise rates up to 18%, which I don't think they can do now. I don't think they can sustain the debt and all these things raising rates that high. I do think maybe the current rate raise is slowing the inflation. I would hope so. But I would guess we're dealing with high inflation for the next few years, if not the next decade, into some type of a currency reset, which might reset the system in regards to inflation, which I'll talk about later on in this video. But the solution to both, what to do with your assets if you're struggling, or if your business is down and inflation, is to go harder into your business, ideally into some type of flywheel, meaning you've got paid ads working, or you've got organic content working, and you can amplify that, you can put money behind that, or you've got something running to a newsletter which you're selling affiliate deals to, and you can start spending money to get a newsletter subscriber, or you're a lawyer or you're in an engineering firm, and instead of taking home 50% profit every month, you put that 50%, you take a tighter salary, you don't take home your 20-30K, you put 20K back into marketing or into hiring sales guys, and you aim to eat up the competition, and you aim to scale up to, instead of 50K, you're going for 200K. So this is what I think the new number is now, not just for this year, but leading into this decade, is you want to be taking home 200K a month, because we're looking at high inflation, we're looking at a recession, we're looking at the reset of the financial system in terms of central bank digital currencies, where this is a new currency, folks. Okay, it will be called the dollar, but it's a completely new currency. We don't know how it's going to roll out. I do have a course coming up on that this year, which I think will be super useful to you. But it could roll out and it could be revalued at 70% of the current rate of the USD, or it could roll out and they don't give you a one-to-one conversion on it. They give you a half on it, or it could roll out and they give you a one-to-one conversion on it, but you're not seeing that money till 2, 3 years later, which is why I'd be cautious about having a bunch of cash in the bank leading up to the currency reset. It's actually something I'm going to cover, not just in the course, but I'm going to do a full video on it for you in January this month. So stay tuned for that because it's quite a lot of material to cover. But let's just talk about the business aspect of it. So, we're dealing with 10% inflation, maybe 20. That might be the next 2, 3, 4 years, maybe the next decade. You've got to keep pace with that in your business. If not, destroy it. And business is really the only place that you can consistently beat that level of inflation. You're not going to beat it in the market. I'm not even sure if the market's beating inflation over the last 10 to 15 years. It just might be tracking the true numbers. Real estate only tracks the inflation number. You can read my articles from 7 or 8 years ago on the Schiller Index that talk about over 100 years in America in the 20th century. Real estate was up 1% above inflation. So real estate pretty much tracks inflation. Gold's been up maybe 4 or 5% a year since 1971, since they delinked it to the US dollar. 4 or 5% on top of inflation, which is good. Equities, as I said, I'm not sure if they've even been beating it for the last 10 to 15 years. Bitcoin has been crushing it, but as you know, Bitcoin's down probably 80% of where it was around this time last year. So it's not something you can exactly bank on. If it's something you're buying for the next decade with a portion of your bag, then that's something, but it's not something I'd want to be into 100%. I'm actually going to do part 3 of my crypto video series at some point this year to talk more about that. But Bitcoin over the last 10 years has certainly been beating inflation, but it's not a chart that gives you a lot of stability. If you're talking about, that is your nest egg, that is your sort of cushion, and cash is certainly getting slaughtered by it. You probably lost whatever you had in terms of your net worth in cash last year by 10, 15, 20%. And the funny thing was, it seemed like the smart move to put it into Bitcoin, something that was an inflation hedge or into gold, but you put it into Bitcoin, and not only did you get hit by inflation, but you got hit by an 80% drop in inflation, because it turns out not really an inflation hedge. It's more of just a corollary with the money printer, which seems to be almost all the assets except for gold at this point. Gold's kind of been on a steady upward curve since 1970 or so. So had you done that, that would have added insult to injury. The big thing where you can really generate the returns is your business. And in the growth stages of business, you can get 100%, 200%, 300%, 3,000% return on your initial investment in the growth stage if you've got a hot one. And you can get those thousands of percent, not just in year 1, but year 2, year 3. It's not until you're up at 5 or 6 million or whatever to where it starts to level out and you're getting 50 or 60 or 70, and then eventually it might settle into 20 or 30%, which is still better than equities. It's still better than Warren Buffett's investment track record. It's still better than Paul Tudor Jones' investment track record, even at a settled down 20%. So business is really the only way to get rich. As you might have heard that more millionaires made their money from real estate than anything else. That might be true, but they didn't get the money to invest in real estate without building out some type of business. Even Warren Buffett is not an investor. He's a business owner who owns Berkshire Hathaway, which owns a bunch of different businesses, and he's in the business of, he gets investment because he does better than the 8% that the S&P offers. He's in the service business. So every one of those Forbes 500 guys is a business owner. Steve Jobs, Bill Gates. Okay, yes, some guys have made money from business, put it into real estate, made a bunch of money there, but you don't get the 200, 300, 400K to go into real estate without, either having a high paying job or being an entrepreneur who's able to generate well above, disposable income that he could invest. The average job worker can't get into real estate except through the back door from wholesaling, real estate wholesaling. But that is a business. That's a part-time, if not full-time business to get that off the ground. Um, so even within that vehicle in real estate, it is a business. Um, so you've got to go harder on your business and aim to capture 100% return on your investment this year, 200%, 300%, 400%, 500%. That solves inflation. Um, that solves the asset market, bear market that we're in across the board, to where instead of taking your money out every month, you're putting it back in to a high growth vehicle. And it also prepares you well for a potential currency reset where you might get less than 1 to 1, or they might do what they did in Brazil, which was like they say, poor people get 1 to 1, maybe 3 grand in the bank so that they don't riot. Anyone above 40K, you're getting a 1 to 1 conversion, but you're going to have to wait. And they give it to you 3 years later when the currency's worth 80% of what it used to be, because it's a completely new currency and they've wiped off bond debts and all these other things, which I'll get into in my currency reset video. So you don't want to be leading up to the full currency reset holding a bunch of cash, okay? And being at the mercy of how much they are going to convert that over to the CBDC. But looking at assets right now, those aren't doing particularly great. And the assets won't get you rich for the most part anyways. They only get you richer when you're already wealthy. Um, but that would have to be like you're getting 10%, 15% on your portfolio, whatever, and you've got a mil, 2 mil, 10 mil, like some of the guys in my RLD Brotherhood, or I know a decent amount of guys who are above that Deca Millionaire range in the 10, 15, $20 million range. Yeah, they can live easily off their 10 to 15% a year. But the average guy, even the average wealthy guy, that's not a whole lot. And as far as I'm concerned, those aren't even beating inflation right now. So you've got to aim to do at least 15% on your net worth, or 10% to break even. And the one best place for that is reinvesting into your private business, into some type of marketing or sales flywheel, perhaps investing in into courses to get your education right. You can invest in our brotherhood, revolutionarylifestyledesign.com/brotherhood. We've got a lot of good game, a lot of successful guys in there, not just on business, but investing on these types of strategies. Your high margin business, or even if it's a medium margin business, but you've got a flywheel to invest in, is going to get you through this year. And that old target that I've been talking about, as you know, I've been doing RLD since 2012, which was move abroad, geo arbitrage your income to Southeast Asia, Eastern Europe, Latin America, where it's 3-4 times cheaper. Minimize your tax burden if you're an American from the foreign earned income exclusion, as well as redomiciling your business. Or if you're like me, a Canadian, Australian, UK, Irish, New Zealander, declare non-residence in your home country, so that you're not liable for your home country tax, live in a non-domicile country, run your business out of Dubai or whatever, and you've effectively and legally eliminated your tax burden, and aim to make 20K a month in a lifestyle business, 25K a month. That's been my strategy. It's did me pretty well in my 30s. Now at 40, on the cusp of the reset, inflation, artificial intelligence stepping its game up, how much of your currency would actually be getting converted. Potential hyperinflation scenario this decade, I'm leaning sort of against it. There certainly will be in some countries. I don't know about the US dollar. I'd probably lean against it. All those factors means the new target is not 20K a month, it's 200K a month. 200K a month. Because we've got a plan for what does 200K look like 10 years from now if we're at 10, 15% inflation, if not more, the reset? There's so many different factors, and there's so many different strategies, but the best way is just to get rich for sure.